What's up? What's up? What's up, everybody? It is Tuesday morning. Yeah, Tuesday. Hope everybody's having an amazing day. Welcome to today's edition, Daily Market Commentary, Election Day. We are ready to rock and roll, as they say. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun stuff as it happens. If you're here and a regular viewer, hit that little thumbs up button. Leave a comment down below. That is always pretty helpful. So, hey, Dennis, I'll take your vote anytime that you want to get it. It's election day here in the U.S., so just make sure you get out, push the button. But your vote, I heard somewhere your vote doesn't count unless you go on social media and you take a selfie of your I voted sticker. I guess you have to have your I voted sticker. It's required by law to post that because it looks cool. Not really. I know it's hard to believe, but you can vote without telling everybody that you did. Anyway, I'm just saying. All right, I'm off my soapbox. All right, so let's go ahead and do what we do each and every day. We're going to look at our 10 to 12 futures markets from an educational perspective, looking for the best areas of opportunity in today's market. So let's go ahead and start with the ES. So yesterday, our 15-minute ES level was, as they say in French, très magnifique. I don't speak French, but it was damn good. We came down right to the origin of the move. That's a good point, Dennis. Staying home does count. So, I'm not saying you shouldn't get out and vote. I'm just saying I don't need you to selfie it and put it on Facebook. Anyway, I think everybody should get out and vote, no question. So, this level of demand yesterday, price came into that area. We got a really nice move away from that zone. And now we've started to kind of come back up fairly strong. Now, we had talked about, and I don't take credit for it, I'm going to give it to John Sr. He's my boy. You're my boy, Blue. He found the divergence in the 4-hour on the MACD, giving us the opportunity to kind of look for some of those bullish areas. And now we've got a move up in the overnight that could be a little reminiscent of yesterday's move up. So I'm gonna wrap my lines around this area right here, which now that we've had our time zone change here in the U.S. brings us right back in line with the London Open for this area right here. So you got 33.22 by 33.16 as the origin of that little move on the pullback. So hopefully some of you were able to catch yesterday's move in the S&P, as that was a decent little run. We do have some supply up above us, but that supply that's coming up above us is this wick over wick area, pretty clean area of supply. So be aware of that zone. That's right there around 33.60. NASDAQ. Now, the NASDAQ broke through our 15-minute level. So we had the 15-minute level in the NASDAQ as well, and the NASDAQ level, kapowie, went right through it. I mean, and it went through it quickly. Right away, got below that pivot, right below where your pivot would be for a small stop out relative to the reward that was being offered. And it has not recovered as strong as the S&P. So when I go back and look at these markets, we'll see that that it is not recovered as well as the S&P has, and and one is significantly higher than the other. Okay? So when I'm looking at those, what I'm going to try to find is relative strength is not with the NASDAQ, right? Relative strength is definitely with the S&P today, and with our other markets. The NASDAQ did not have that same powerful move higher. So when I'm looking at bullish opportunities, the S&P is going to be my better option. Matter of fact, the NASDAQ, when I look at it, stop it. There we go. When I look at the NASDAQ, I see that on our 15, let me put on the 1 hour. So we're comparing proverbial apples to apples. The NASDAQ, I see that we've gotten a little bit higher, but unable to get above Monday's high. Whereas in the S&P, we did get above Monday's high. Okay. We did get above Monday's high. Jersey Trader, glad to have you as part of the team, man. Welcome aboard. Let's see. Greg says, high for the ES supply zone. What does the wick over wick imply? Well, Greg, what that wick over wick here implies is that we have a little bit of an imbalance right below the pivot high. And wick over lick levels right below pivot high are very, very highly probable levels. We find those working pretty effectively in almost every market condition. I've seen those to be now. By the way, that's right now. The markets will change and eventually we'll start blowing through those levels. But until they do, I got to keep trading them, right? That's one of the things to notice about these levels. Are these levels always going to work exactly the same? No. When enough algorithms start trading against those levels, then you're going to have to go find other setups. Right now, those algorithms are not necessarily trading against those wick over wick levels around pivots, and so I look for those a lot. And that's what it implies is that I wrote an article on it called "The Law of Diffusion of Innovation in the Markets," and you can read that on the blog on the website. And it's just about where does the silent majority step in to begin price to start moving. So. All right. In our NASDAQ, we do have our 15-minute supply level up above us. So that 15-minute area of supply that's up here is from this long wick. So we wrapped our line around that because of this long upper wick, because that means price came down, went a little bit up, kind of based in here, and then dropped. That's why we have that 15-minute supply area. As far as demand below me, I don't want to rely on this area of demand, which is the one that we took in the S&P, because frankly, we've already come close to it once without price getting into it, and now we're coming back down into it again. It certainly is definitely a better opportunity for a breakdown than it is a breakout to the upside or a reversal trade. So I'm not going to add any demand areas here to the NASDAQ today. Let's see. Jasmine says ES changed trend from bullish uptrend. So let's go back and look at the ES. So when I go to my ES and I look at the 4-hour chart, what are we looking at here? Well, I've got a couple of swing highs and swing lows, but I really like to use this zigzag indicator to kind of smooth things out a bit. And so the zigzag indicator, because I like to use that to smooth things out because it makes my decision making a little bit easier. It's not really counting this as a new swing high and this as a new swing low. I mean, a lot of people would count that as a swing high, swing low, price getting higher. So at the very least on the ES, we can see that we've put in a higher high, and we've not yet put in a higher low, right? We've got a higher swing high, but we don't necessarily yet have a higher swing low. So officially, the trend hasn't completely changed, but in all efficacy, it has. If I look at the NASDAQ and I use the same indicator, the NASDAQ, very similar position, except I don't have that same big higher swing high. So technically, we've not broken the downtrend. Technically, the NASDAQ to me is in a sideways trend, and the S&P is about to switch to an uptrend. All right, let's look at the RUT. So the Russell yesterday also came into our 15-minute area of demand, and we got a very strong move away from that Russell level. Then it came into our area of supply up above. Now, I felt pretty good about this supply area, but what's wrong with this supply area when we got there? What's wrong with that supply area when we got there? Well, what's wrong is when we got there, right? This is the toughest time of the day to find these kind of levels effective. Now, the basing there in front of that level, it's tough to find those kind of levels effective when we get there. If you took it, it's a small loss, especially relative to the profit on the way up. But it definitely served as a profit objective. Now, on a pullback, I would look to this area here. It becomes a bit of a flip area in there. Okay, a bit of a flip area that sets up right there at 1577. Dennis mentioned that the Russell is kind of holding some supply, which it is holding some supply right here. And so we'll see if that supply is enough to pull it down to here to allow us to get an entry on the long. And then in the Dow, we did not make it down to our Dow level, as the Dow has been our strongest market. So same thing, this hit at that, in the overnight, this came to our area of supply. I'm going to look at the same basic level, although I'm going to go to the 15 on this one. Same basic level on here, 27,026 by 26,968. So price coming down roughly to 27,000. I mean, that's a 150 point drop from where we are right now, but that would be a nice little move. All right. So, any questions on my equity markets? Any questions on the equity markets? Let me get rid of this. You guys can actually see the lines when I share the grid. All right, let me share this grid. All right, and Jersey Trader, were you guys ever able to work it out with Corey so that you could see all of the grid updates, all of the trade updates yesterday, so that you could see so that you could find them? All right, let's see. Commodities. Let's take out commodities. Okay, beautiful. Awesome. Love it. All right, so next, let's look at crude oil. So looking at crude oil, we had two levels set up in crude. And the two levels that we had set up in crude, so crude decided to take as Bugs Bunny would say, a hot left at Albuquerque. It completely changed direction on us on our 4-hour trend as we bounced with really no slowing of momentum, no nothing. Just got a strong, hard reversal back the other way. So when we see that strong, hard reversal, that's where we start to run into some areas that are going to fail. And by the way, when you're following trend, how will you know when your trend is over? When you get stopped out on good levels. And that's exactly what happened yesterday. We had this hourly level here, which was the gap fill, which was a confirmation short. Price went through that one before giving us an entry. Now, I will say that I liked the level above a bit better. I liked this level. Matter of fact, this is a pretty clean zone. Nice, decent move away. Good time of the day. Price came in here and gave us a small stop out. It definitely gave us a stop out with really very little hesitation at that level. And so that right there was your clue that said, hey, this is going to be where we see price now start to be a bit more bullish. Now, it did come into our supply level in the overnight, and we got our 6 candle rule that would have certainly taken us out at break even if you even got in. In reality, at this point, I don't know that I would even want to get in. Right now, why would I not want to get in? Well, because we based in front of the level. It came back to the origin of the little move up, the opposing demand zone, and it wasn't a good reward to risk. So just because we have a level on our chart doesn't mean that the level's still going to be good when it gets there, and that's a good example of that. So now I'm going to look to this area here of demand. Now, why am I looking at this area here of demand? This area here of demand is pretty useful because of all of this area here in the past, right? That's why that level is going to be a fairly strong level and a decent area for us to be excited about. 3683, 3656. We can go a little bit smaller. Go 3677 to 3656 if we really want to tighten it up. So that's a decent little zone and a decent little area. As far as supply above me, you got some pretty clean supply up here. But I think something tells me that I would rather see us base and do a 6 candle move in here and then look for a breakout above this region. This is decent supply, but better than that is going to be all the way up here at this $40 region. Now, I will tell you, I don't know what came out that caused this bullishness to happen, because there was no true demand for us to get a great turning point there. I mean, even if we go to a daily chart, I guess we came into some daily sideways price action, but it wasn't phenomenal. And I thought there was a chance we were going to make it all the way down into this region here, this 29. So, is it going to hold up? I'm sure it's got some validity to it. I do want to check one thing. So taking a look at yesterday's highest volume, we were at about 46,000 contracts at the peak. On average, about 30,000 contracts, which is about the same as Friday. Nowhere near what Thursday was. I mean, Thursday was double the volume. I wanted to see if we were having a significantly lower volume on the way up, but that was not the case. So there was not a significantly lower volume on the way up. I thought it was worth checking out. Now, interestingly enough, if I take a look at the London Open from Monday versus the London Open from last night, look at the amount of volume last night right there at the London Open. That to me is really, really interesting. Now, that shows me that there was twice the volume on Monday night's London Open, right? And here was, just for comparison's sakes, here was Friday's. Thursdays was the one that had us into the strong volume day. So a little bit higher on that volume side. But I wanted to see if we had a decrease in volume on the way up, but it does not appear that we did. So let's keep an eye on here. Let's see. Hey, Nathaniel, good point. Reminding everybody, appreciate that. Hey, hit that like button. It helps a lot. Lets people know what we're doing here every day. Trying to boost the viewership, as they say. All right, gold. So gold yesterday came into our level, and it was a pretty good little level. Now, why do we like this level? I liked this level. The last time we had one of these levels was this little wick over wick, which then price hit it and moved away very nicely. And I chose that level because of all the support over here to the left. So we did it again. We went to the well a second time with a little wick over wick. And this time we had a different picture because we were basing coming into the level. We gave it a little touch right here and just barely missed it. I mean, by like a few ticks, but then went basing sideways. So that told us, hey, this level's probably not going to work out very well. Now, if you got into it anyway, 1, 2, 3, 4, 5, 6 candles later, you'd gone basically nowhere, right? So no big surprise that level didn't hold true based upon the basing in front of the level, because as we all know, basing is the kiss of death before a level. There's a little wick over wick area built right into here that might be one worth identifying. And if we look at this little wick over wick level, 1897 by 1895, and I think there's nothing wrong with canceling when you see a near miss. Our rule, Dennis, is you either cancel the level or you switch it to a confirmation. But when you come that close, you're destined for potentially a breakout. Now, this hourly level this has been hanging out there for quite a while. 4-hour trend is definitely coming up. We definitely have some upward movement here on this 4-hour trend. When I look at this 4-hour trend and I move down here to the 1 hour, as price continues to rally, we are definitely coming up, and this has to be a confirmation trade at this point, which kind of stinks because it's a pretty good level. But based upon our trend direction, I've got to change my entry. And that's because my 4-hour trend is definitely showing me those higher highs and higher lows. All right, Nat Gas. We didn't add anything to Nat Gas yesterday. We still have the gap fill area in play down here. Technically, you could also look at this area right there if price comes back into this zone. And then, yeah, profit margins are a bit limited, Liz, at this point. There's not a huge profit margin in that gold. I would agree with that as you're in between those zones. And then copper is actually giving us a potential for a breakout, right? As we're sitting right below this 3.1. We could get, yeah, I know that was GC, Liz. I popped over to it, but there's a little delay in the chat. So there's a little breakout potential here at this 3.1. And I'm okay with it up to this region here, right? And then that takes us to the origin of this move down. Our 4-hour trend is showing us that if this level holds, meaning it as resistance, then I think there's a better chance that we make it all the way down to here. But the basing in front makes it an acceptable trade for price to make it up to this region, stop below your pivot down here. All right. So let me highlight these real quick, and let me share this grid. All right. So let's move over to our ags. So looking at our ags, which I didn't even look at yesterday because we were pretty busy and I was running around like a chicken with the proverbial head cut off yesterday morning, and I didn't get to the ags at all. Soy we had talked about the other night. We did wind up breaking below, and then 6 candles later it had gone nowhere. We then had another breakout up above this region. Did I get quality basing? I got basing, but I didn't get quality basing, and it was 2 o'clock in the morning. So I'll tell you, there's no way I'm entering this position because I'm asleep. I've got to get the right setup, and I'm not. I never toss and turn in bed at night because I didn't set up a trade. I don't know if anybody else is like that, right? If you toss and turn at night because you didn't set up a trade, then you're not trading right. You shouldn't toss and turn at night anyway. Sleep like a baby. All right. 1059 by 1057, decent little reversal area here in soy after what looked like a bit of a basing pattern. Corn, also, we had a breakout trade. 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere, telling us that we should probably get the heck out of Dodge, and then look at that, it popped right back up. This is why we have the 6 candle rule. I just wrote an article about that for Futures Magazine, and hopefully it'll get posted this month or next month. But I just wrote an article about the 6 candle rule, and I will say this unequivocally. Nothing has saved me more money in my trade management rules than following the 6 candle rule. Nothing. Because the 6 candle rule gets me out of trades that I should probably get out of anyway. And I cannot stress that enough. All right. Next, wheat. So wheat, we had a really nice, clean 15-minute supply area. And this 15-minute supply area was a drop base, very strong drop. We had a good, solid move away. It was formed at a good time of the day. We had only a few candles in here, and it was a really nice move. And here is just a simple fact. The news doesn't care about my technical analysis. I mean, it just blew right through that area. Right? It just, I mean, it didn't even pass go, did not collect $200, nothing. Okay. It just blew right through that area. And so now I think that area is still valid though. And I think it's still valid here on the retest of that area, because now it becomes a bit of a flip zone. Paul, hey, good morning, Paul. Hope things are going great for you, brother. 6 candle rule on the 15-minute, right? Not necessarily, Paul. It's the 6 candle rule on any time frame in which I enter the position. So if it's and that's why I use color-coded lines. The biggest reason that I use color-coded lines is for my 6 candle rule, because I know if it's a green line, then that means that I need 6 1-hour candles. If it's a purple line, I need 6 15-minute candles. That's the key. That's really what it boils down to. And then typically on a breakout, I find them on the hourly chart. Not always, but I typically find those on the hourly chart. Let's see. Andrea, yes, 6 candles, even with currencies. Same exact rule applies. Liz, you don't have to change your name. Your name is great. All right. Dwight and I had a little conversation. You might see another Dwight video hitting the airwaves here soon. I'm just saying. I'll give you a hint. It's often imitated, never duplicated. Those are the Dwight zones. All right. So looking at bean oil, we see on a 4-hour. You can see actually a pretty nice little trend line that was forming, but that's actually a weakening momentum trend line here. If I go to the 1-hour chart, Well, Dwight would make a very nice. He would make a very interesting president. From his career as a professional dodgeball player. I mean, that's really where it all started for him. I don't have a whole lot here aside from a potential breakout above this 34 region. That's where I would anticipate potentially getting long. You could have a pullback into this area here. I just really don't love the time of day. Dennis, I thought about going into politics for about 10 minutes, and then I remembered. Number one, that would suck. And number two, it would be horrible. So that's why I would never do it. I did, because I genuinely would love to help people, and I love to get out in front of people and fight for the right causes. But you know what? I don't think that I would. I just don't. I have a really hard time with. I'm not sure what a House seat pays, like the U.S. House of Representatives. I'm not sure exactly what it pays, but I have a really hard time with needing to raise multi millions of dollars for a job that pays me under 200 grand a year. I got a really hard time with that. There's an issue with that. And, for those that do it, great. We need them, but not for me. All right. So looking at the ZN yesterday in our bond levels. So here was our level in the ZN off of our 1 hour chart. We identified this level up here, a little bit of sideways, very strong move away. Price rallied up into that level, and now we've gotten a nice move away from that zone. So if you were able to take that trade, congratulations on you. Glad you were able to take it and run that thing down. Now's the time to take and move your stop somewhere down below this region. I actually really like this wick over wick here. It's not a perfectly clean one, and we're basing in front of it. I like the structure of it, but we're basing in front of it. So I'm not going to utilize it this time around. I wouldn't be surprised to see us reverse off of it, but it doesn't fit my rules. So I'm going to put a potential breakout line below here. That's where I would go. It's not the pay, it's the perks. Well, Kurt, there could be some perks. All right. Next, ZB, looking at the bonds. Continuing on the bonds, the 30-year here would be our breakdown line. If we rally up, this one actually has a little bit of a better wick over wick setup because the basing's a little further away as a potential, but it's too close, and so I'll actually come up to the pivot itself. All right, the euro. So here we go in currencies. Now, currencies we saw yesterday, kapowie, right? Prices rallied really hard on our currency markets. Strong move up, and we talked yesterday about a breakout in the euro. So we did get a bit of basing here with that breakout in the euro. That wound up being a really nice runner. Let me look at it on the hourly chart here. Nice bit of basing, good move, and strong overnight breakout. So for those of you that are in the UK, that trade set up for you very, very well because it gives you, you're able to actually be there and see the basing. Here in the US, we're probably not going to see that basing if we're in bed and we're at snooze fest. You shouldn't be trading while watching Jimmy Fallon. But that's a picture-perfect example of looking for basing before a level, strong breakout. Now, why didn't this 15-minute level hold? Somebody tell me why this 15-minute level failed. What would be the reason that this 15-minute level failed? Say, if you think about this level and where it exists, this level failed because I want you to think about the concept of I guess a spring, right? A spring has a tremendous amount of kinetic energy stored inside of it, and there was just a lot of kinetic energy stored in there, and then it pops right through. And so the way I think about it is imagine that I'm holding. I'm going to make my screen bigger here for a minute so you guys can kind of grasp the concept. Make my face bigger. So I got a piece of paper here, right? So this piece of paper that's above me, let's say I've got this piece of paper that's above me, and we're rising up into this paper. Well, if I go up into that paper with not a lot of force, that paper is going to stop whatever's coming up. But if I have if I've got something down here that's just building up energy, building up energy, building up energy, building up energy, and then I thrust, what's going to happen to that paper? Right? It's going to blow right through that level, and you're going to see it go right through that area. And that's what we saw there. Oftentimes on a breakout, if you've got an opposing level that's a smaller time frame than the breakout. Now the key here is that it's a smaller time frame than the breakout. It will blow right through that and rip right through that paper and that area. So, let me shrink my head again. So, when I think about that smaller time frame here, that 15-minute level, it's going to have very little chance against a 1-hour strong breakout. And that's what I was looking at here. We see a nice round bottom here, a nice bit of basing and a round bottom with our next supply level being up here. Now, what do we think about this next supply level? How do I feel about this 15-minute supply now? Think about how we feel about this level. We should hate it. And the reason that we should hate it is because now we're basing in front of the level right here. Right? It's kiss of death, baby, kiss of death. And so with the kiss of death, that basing before the level, this level here is now DTM. It's dead to me. I cannot use it again. So I'm going to go back to the origin of this move up where we saw the big powerful thrust, and I'm going to put that as a demand area, and that's where we would look for the reversal. But as far as supply goes, I got to come all the way up here now for supply. We could get another basing area somewhere right in here for another breakout. Now, why am I picking that? I'm picking that area there, not because of what's happening over here to the right, but because of what's happened over here on the left, right? And an old area of support acting as a new area of resistance. If we get basing here, now we may get a move away. And you're going to see that picture repeated a lot in our currencies because we saw all of those currencies take that pop yesterday. The Canadian dollar gave us a pretty good run, came really close to our 15-minute supply, and then backed off of it, thus creating a confirmation entry, thus telling us no entry. And then our wick over wick level right here just popped right through the level. So that one wound up breaking through. Now, that broke through, but what's also happened with our trend? Our trend has changed direction. And so if you were in front of that market, you certainly may have changed your trade setup. And this is once again, just something to consider. Oh, gold hit the level. Let's go take a look at it right quick. All right, so gold's in the confirmation short, but is there an entry as of yet? So if you're going to take an entry on gold, you're looking at an entry right here at 1906 as your sell entry. 1906 would be your sell entry because now if it gets above 1908.9 or 1909, you're going to cancel the order. Okay? Because this is a confirmation short at this point. Doesn't provide me with a tremendous amount of profit potential because I'd have to take profits down here at about 1900, 1901. So it's a very small profit margin on that trade. All right. Coming back here, looking at our other bonds and currency markets. So looking at the 6N, our New Zealand dollar, the 15-minute New Zealand dollar, that level didn't hold either. Price came into the zone and then just popped right through it. So we had a couple of stop outs in our currency markets yesterday because, once again, we got a little bit of that 4-hour momentum up, and that all stems to the weakness in the U.S. dollar, right? It all stems to the weakness in the U.S. dollar. In here, I would still come back to there. That's really going to be my best area and best level, and then this has to be a confirmation. I didn't realize what time it is. I'm running out of time over here. Great British Pound, gap fill area. Remember, we talked about the fact that gap fills haven't done a whole lot, and this one was, much the same. We went through it right at the London Open. So we'll look to this area right here, 29.37 by 29.31, as a potential reversal point if price comes back into there. That's going to be our better level, that wick over wick area. Japanese yen. I ain't even going to talk about it. There's really nothing here to add. Level down here, breakout up here, bunch of garbage in between. And then the Australian dollar, we also popped above our 70.78 line. without any basing. So there's no real reason to get in. And then it came to our 15-minute level. Now that we have, some strength and we're going against that momentum. And so it went right through. So currencies are all telling me the same picture, right? The currencies were all giving me basically that same picture. And it was that we had a lot of momentum coming in with our smaller, with our currencies because of the weakness we were seeing overall in the US dollar. Okay, let me share this grid. All right. And let's take a look at our other one right quick. All right. So the grid is updated on the trade feed for those of you that have it. And so go ahead and take a look at that. You also have two updates from the trade worksheet that Justin put out this morning. The Aussie US dollar hit target 1, and it's moving nicely towards target 2. And then the ES zone from the video gave a 5-to-1. It's a small time frame level. And then, so Justin gave you two of those in there. So hopefully you guys were able to catch those that are in the trade update. If you guys are not members of TradersArmy.com, why not? Come become a member. We'd love to have you. Use promo code TRADER60 to get 60% off your first month, and we'd love to have you come and join us and see what we're all about. It's a good time. You're missing out. You got to come join us. Today, Corey is doing the longer-term options session today at 10 a.m. So longer-term option session today at 10 a.m. A couple of our options positions from our bullish options positions from Monday night's room met entry. So I'm wondering if anybody was able to get into those. The biggest one so far being First Solar, FSL, being First Solar, bouncing off that move there. So that's still a pretty good setup. We got our our candle to candle kind of area and opportunity on the bull call spread. So just keep that one in mind as a potential for that one to run a bit higher. So. If you guys have any questions, let us know. Oh, Jersey Trader says, will GC become the safe haven for the markets? Do you expect it to hit over 2,000? Well, when I look at gold overall, daily chart, right? Actually, hell, weekly chart, going all the way back, we've already come to over 2,000 once. I don't think there's any reason why we can't do it again. We've just got a pretty strong pullback. Gold has, people all year were dumping money into gold. Gold was a safe haven all year. People were slowly putting money into there, and we saw price just kind of continue its move through that area. So what I want to see is where is the best area for price to reverse and then get higher. I think you're looking somewhere above this 1942, 1946 area. Okay? All right. Let's see. AK says, do you trade ES futures live for members? What we do is we analyze the markets and we look for great opportunities. That's what really matters. Rather than handing everybody fish, we want to give you the opportunity to learn how to fish. And so we take some trades when the market gives it to us inside the room, absolutely. But in reality, it's really understanding why are those levels formed, why do they exist, and then kind of helping everybody and supporting everybody. And then the other thing that we do is we run the trade worksheet, and the trade updates are really a big thing that people kind of get really excited about, because that's really where you see the trades that kind of get through. So, AK, we've got a Sunday evening session, a Tuesday early in the day, a Thursday morning, and a Wednesday evening. So we have 2 sessions a week in the evening and 2 sessions a week in the morning. So. No, AK, this is not the room. It's not done in YouTube. It's done in Zoom. Just go to TradersArmy.com and you can see the calendar is right up on the site. So we have the calendar, and everything is there for you to kind of take a look at and see what it is that we do. Here's the I'll pull the site up. Here's the site right here. Just go to more, or go to About and go to the calendar here, and you can see when we do all the different stuff that we do. We got an active trading intensive class coming up here in about a week or so, which I'm looking forward to. So anybody who wants to come to Houston, let me know. Come on down. We still got a couple of seats left for the live session, and then there's still some room in the online version if you guys are interested in taking the active trading intensive class, which is options and futures combined together into one 3-day session. So, but every week it's Sunday evenings, Tuesdays during the day, Wednesday evenings, and then Thursdays during the day. So, yeah, you know what? I've actually heard that from a lot of people, Jersey Trader. I won't forever be doing daily market commentaries for free on YouTube. I won't be doing it forever. I do it right now rather than putting it all into the room. But we'll see how long this goes and the way we do it. So, all right. Ryan says, what time frame do you use for confirmation on the short on gold? Hourly chart, Ryan. That's an hourly level. As I look at this zone, this GC, that's a green lines mean that we're using the hourly candlestick. So you're just about close to a potential entry. It's just not quite there as of yet. So, all right, everybody. Hope you guys have a great day. I will see you all soon. Remember, tonight's election night. I may throw a few tweets out there. If you guys have questions, by the way, Traders Army members, shoot me some text messages throughout the night. I certainly will have my text phone ready to go, and I'll have my charts open in front of me if you have questions or comments or you want to jump into a room. So I'll talk to you guys soon. Have a great day. See ya.